Investments from family offices actually slowed down in the first half of the year. Robert Frank is here to tell us why some of the wealthiest investors in the country have been pressing pause. Hi, Robert.
Good morning, Becky. Great to see you. Well, family offices pulled back their deal making in the first half, waiting for a little more clarity on what the tariff situation is going to look like. The total number of direct investments by family offices and startups fell 32% through June. That's according to exclusive data from Fintrix. Now, their investments fell in just about every sector, including their normally favorite areas of tech, healthcare, and life sciences. Now, the one segment that did see an increase from family offices, you guessed it, was AI. Companies like Sandbox, Genesis AI, and Anduril all attracting a lot of family office capital in the first half. Now, among the most active family offices through June were Peter Thiel's. He made 9 family office startups investments, largely in aeronautics and AI companies. And you have Eric Schmidt's family office called Hillspire. They invested in Relativity Space and a company called Imprint Labs Biotech. And Lucas Walton's family office, he's the youngest Walton heir. He invested in sustainable energy and agricultural companies, including carbon upcycling and a company called Firefly Green Fuels. They make sustainable aviation fuels. Now, for more on the biggest family office deals in the first half and where the wealthiest investors are putting their money, you can sign up for the Inside Wealth newsletter. New one out tomorrow morning at cnbc.com/insidewealth. That's cnbc.com/insidewealth.
So that drop of 32% was more than I had expected, just based on what I'd read in the intro leading up to some of this stuff. How quickly can that change? Because that was through June 30th. This month could make a lot of difference. We're hearing trade deals getting announced by the day. You think that's the type of thing?
It could. And the reason that companies like these startups love family office capital is, number one, it's very patient. Number two, it's flexible. And number three, it's fast. So these folks, because it's usually one person making the decision, right, if they feel more comfortable in the environment, which I think they will in the second half, it also depends on which companies are out there fundraising. And with private capital and private credit providing so much in the marketplace, there may be a little less need by startups for this kind of fundraise. They may just get it straight from private credit. So if we get more offerings and these family offices are more comfortable, which I think they will be, we'll see more in the second half.